Good evening. Welcome to another edition of the ShadowTrader Video Weekly for Sunday, September 5th, 2021. My name is Peter Resnicek from ShadowTrader.net. I had the pleasure of speaking to my friend and mentor in the market profile, Mr. Jim Dalton, earlier this week. And we talked about a lot of factors in terms of how September could play out. And both of us were kind of a like mind in that the public tends to think that September has to be bearish because statistically there have been a lot of bearish Septembers. But as we all know, when the market climbs that sort of wall of worry and everybody's thinking the same thing, usually the opposite happens. I'm going to talk about just three things in this video that I think are very specific as to how September could play out. We're going to talk about sector rotation, we're going to talk about value, and we're going to talk about the Russell 2000, all right? Beyond that, we're going to touch briefly upon the fact that we do have a Fed meeting coming up in the third week of September that could have some potential to move markets a little bit. And we'll take a quick look at the trade of the week and some of the activity that we've had in the weekly options advisory this week, which has been extremely profitable, both for myself and everybody involved. As I always like to say, without further ado, let's get into it. Okay, so let's start with just a really brief discussion about value. We don't have to get too heavy into this or get too far into the weeds, but one of the things that I was discussing with my friend Jim was that he said, his exact words were, staying with value keeps you on the right side and away from bias. And he was talking to me about periods where he suffered drawdowns, and obviously every trader has periods where they suffer drawdowns. That's not saying anything negative about Jim in any way, shape, or form. I mean, we all go through that. And something really jumped out at me, and I hope that this helps other traders as well. He said specifically, all of my periods of losses have happened to me when I've come into the market with a bias. Now understand that he's a day trader, and for somebody who just trades day time frame only, this can absolutely kill you. You have to come into the day with an open mind, understanding what's going to happen. But understand that this idea of bias can hurt us as well, even if we are longer term traders, which most people who listen to these videos are. Most people are not just day traders. They're thinking in terms of, what direction am I going to go with the market? So if you come in with a bias and it's against what the market is doing, obviously you're going to get killed. And what Jim is saying by value is simply paying attention to where value is developing. Where is value? And if you go against value, you're going to get hurt. And notice that value, I'm just marking off the value areas of the last 5 days or the week we just had. It not only has it not moved, but here it's overlapping to up, correct? So why would you go against this? So you can think what you want about the month of September, but value hasn't changed. And that concept of value is really, really important, because what is value? Value is equal to price plus time. And what do that price plus time tell us? When you add in that extra element of time, or if you want to measure it with volume, it doesn't matter, it could be price plus volume. It's telling you essentially where traders believe that prices are fair. And if prices are fair where they are, you do not want to be betting against them. It's very simple. Just think of it that way. So prices continue to be fair at all-time highs. We don't have situation here where the market's just like having big profiles that are like spiking higher and then falling apart, but where value's staying down here. It's basically just a balance area that's moving up to the upside. So in a nutshell, what you can take away from this real quick, don't fight it, all right? On a more nuanced level, I will point out that we do have a all-time high in an overnight session. That's a carry forward as unsecure. Market profile theory just basically tells us that auctions generally don't end for good unless they end on a bang and not a whimper. I've talked about this before. Always carry forward any swing high that is made in an overnight session. It is probably unsecure. All right, so keep that in mind going forward. All right, other than that, there's not really that much to glean from the profile, other than this bottom of these single prints here continues to be a key level for me going forward. I would not change my bias in any way, shape, or form, or even think about changing it, and I'm not even sure I would change it even if we broke this, but it's always good to have a line in the sand for the next week of where things have potential, and you know I love that word potential, to change tone. So watch that 45.10, all right? As you look at the rest of the week that just progressed, notice that there's a classic when what should happen doesn't here, in the fact that we didn't clean up the entirety of these single prints, right? This area here was poor structure, should have been cleaned up. We didn't clean it up to its entirety. We only went to here, and then we literally went higher low twice in a row. Not a higher low here, but an excess low here, which is bullish. Ending this sort of down auction here on a bang, so to speak. So you have your key levels to look at, and you know what you should be looking at. And as I always like to remind people, if you want to get this analysis every single morning, look right here in the video. You see this little pop-up right here? You can click right there. You can get a 5-day free trial to my Peter's Pre-Market Perspective, where I basically lay out the key levels of the market profile and the scenarios for the day every day at 9 a.m. Eastern pre-market. Okay, let's talk about sector rotation for a moment. So this is something that has been a dynamic, for lack of a better word, that I've been talking about for a while. And it's basically the simple concept that when the sectors are slightly out of sync, the market will keep going in the direction that it's going, because as money rotates out of one, it'll go into another that'll pick up the slack, and that'll hold the S&P higher. So for this particular part of the video, we're just going to deal with the 11 sectors that make up the S&P. These are the ones that I look at most closely, which is infotech, healthcare, real estate, discretionary staples, communications, industrials, energy, financials, utilities, and materials. Those, if you have a good handle on where these 11 sectors are going and how their chart patterns look, then you will have a very good handle on what the S&P is doing, especially if you pay attention to the ones that have more weight than others. And this is why this little piece of information here is actually very, very valuable, and we use this all the time, is looking at this little gizmo here that tells us where these sectors are in relation to the open. So for instance, this snapshot is taken here on Friday, where you're looking at the chart now, and you'll notice that they are on the chart in the order of weight. You see how Infotech XLK is the biggest weight? The percentage here is the weight in the S&P. So 27.5% of the S&P is made up of tech. Healthcare makes up 13, consumer discretionary 12, communications 11, financials 11, industrials, et cetera, on down to energy, which is only just under 3. So this also helps a lot if you know that as the day is progressing, you see all this stuff is green. Well, that's making up like half the S&P or whatever. You don't want to be shorting, basically. So that helps a lot. And this particular little widget or ThinkScript is something that we include in both the weekly options advisory and the time spreads advisory, which you can check out at the link that you can see below on the screen right now, shadowtrader.net/options. This script is exclusive to subscribers there. You get it for free when you sign up. It's a downloadable from our Pro Trading Room drive. But I use this all the time, basically. I just glance at it all the time. So I look at it in two ways. I look at it on an intraday basis, seeing what sectors are strong from the open. And what's important about the way this script is set up is that it calculates the strength from the open and not from the prior day's close. That's important because remember, gaps will throw things off greatly. You don't want to be looking at all of these sectors being green on a gap up day and then they're just falling all day, and you should be shorting even though these are still showing green because it's from the prior day's close, and that's not really much help to anyone. So sectors are important intraday, but then they're also important in the bigger picture, and that's what we're going to look at right now. So when I talk about sector rotation, I'm talking about the fact that you clearly have, like for instance, look at XLK here. So obviously tech is holding its own here. It's looking fantastic. And this is one of the reasons why I'm not thinking the S&P is going anywhere but to the upside. Tech looks fantastic. It's just consolidating at a high. But look at those 3 bars there that I just highlighted, and look at XLV, for instance, healthcare. And I'll clear it. And look at how healthcare was actually weaker coming down, but then also had a big reversal here, which led to the rally back to the highs. And that's actually the reason why I'm long XLV currently off of the turn. This was actually a trade I'll show you towards the end of the video in Weekly Options Advisory. You'll see that we got long XLV butterflies as we saw this turn happening. Why? Because it appeared that after a number of days down, healthcare was going to be turning. So it made sense, and the market was bullish, made sense that this would probably pick up the slack a little bit and get strong as other sectors would then weaken. And we can do this same exercise if we look at where there was, for instance, a bearish day in one and a bullish day in another, right? Look at XLP. Clearly stronger than the S&P here as it was going up, right? And again, let's just look at that XLK, for instance. Same thing, where you have just this divergence between the two, where the chart patterns just look different. Look at the XLK chart, right? Look at the XLY chart. And I'm just looking at just these last few days. And you see how the chart patterns are different, and that tells us a lot that there's a lot of relative strength, relative weakness. Let's look at some other ones. Let's look at XLI, industrials. Industrials look very similar to tech, but not as high. So the thinking is this is going to pick up the slack at some point and get going. Let's look at financials last but not least, because they're important, right? Same thing, where you have relative weakness coming down while tech was holding up. And we just looked at staples and discretionary, right? Moving in the opposite direction. How those are moving up, XLY, XLP, but XLF is weak. So what do we expect to potentially happen? Well, some money could come out of discretionary and staples and go into financials, and that would be what? That would be net a push for the S&P and kind of hold it up and push it higher. So when you look at this, you have to understand is that all you need is an imbalance here for the SPX to go higher. And if the SPX goes higher, then it brings that confidence to everything else, and you usually see a higher NASDAQ, et cetera, et cetera. So just think about that. Just the main takeaway here of what I'm trying to show you is that there is a constant interplay between all of these 11 groups, and money is moving constantly into one and out of the other. But again, all you need is the net effect of it to be higher, and the market is not going to go down unless you have all of these going down at once. It's just not going to happen. For now, you constantly see this sector rotation, and it's just holding the market up really nicely. So again, this is basically point number 2 to me that points to the fact that it doesn't make sense that the market has to go down in September. It really doesn't. All right, let's shift our attention to the Russell. We've talked about this chart before, mainly just pointing out the huge rotation in the rut in terms of how it's just kind of undulating in this very large range. And this has been going on for like 5 or 6 months now. If you notice that this consolidation here started in like mid-February. So we've got a very, very long consolidation. And all I wanted to point out about this is the fact that since it's not moving at all, one of the things that came up in my conversation with Mr. Dalton is he said, since the Russell is not crazy and it's not parabolic and it's not near the high, it's just been going sideways for so long, he felt that that was a sign that there isn't really speculative money in this market. And I tend to agree, meaning that I don't think that this market is like crazy overbought at this point, because if it was, we should see the Russell higher, given that there are more speculative stocks and more small cap type of names here, and we're really not seeing it. So the market rally has been very narrow, and it's been in, kind of a fewer number of names, and we're seeing it more instead of in the Russell. People are speculating more on like Fangman plus T and things like that, but we're also seeing some of these groups in the S&P kind of holding up at the highs, but we're not seeing it at the rut. So basically the takeaway was simply twofold, I thought, from the conversation, is that because the rut is sideways, we're not seeing a lot of crazy speculative money in it. And two, and I've kind of mentioned this before, is what will happen to the markets if this resolves to the upside. I think it would tell us that there's that there's, obviously another leg higher, and then that could be the leg that's shortable because you're having more of a speculative turn in the markets, where a lot of people often use the phrase, the trash rises to the top at the end. Well, we're not seeing that yet, but we're going to be watching for that. So if the rut actually ends up getting really strong and breaking out here, that could be, sort of that blow off top environment where you have more speculative stocks rising to the top. Keep all that in mind. All right, real quick, FOMC. Next one is coming up here in September 21 and 22. Always starts on a Tuesday, ends on a Wednesday. So put that on your calendar. It's this day that you care about, 22, and it's always 2 p.m. Eastern. All right, 2 p.m. Eastern. Why is this important? Well, we're in that sort of cycle where they're kind of sort of talking about the taper and dropping hints about rate hikes, which won't happen probably till end of 2022. But the main thing is that there will potentially be a more concrete schedule, if you will. I hate to use that word, but as far as like when the bond purchase taper will start. They're saying November, but it's just kind of been very loosey-goosey. So all I'm saying is just look for this meeting for potentially little firmer language as to when the bond taper will begin before the end of the year. And that's that. Has potential to move the market. Be aware. I like to always kind of flatten things out a little bit ahead of these Feds and then just start up again right after. And last but not least, weekly options advisory. I'm not going to get too deep in the weeds here in terms of what we were doing. I like to just let people kind of figure it out by reverse engineering some of this stuff. Just kind of look at all of the actual spreads that were done, and that'll give you a bunch of free education as far as I see it. But the winners have just been coming in really good and really steady. But what's more important about that is not really that, but it's the size of the losers. And that's what I wanted to show everybody. Is this is a historical record, obvious, of every single thing we've ever done in the advisory. But look here in the column here. What you want to be paying attention to is really how small the losers are, and that's important. Oh, there's one, $30, right? 30 bucks. And oh, there's another one, $24. There's another one, 60 bucks. There's 8 bucks. There's 100 bucks. So you see the pattern here where the winners are just so much larger than the losers. The losers are 3 bucks. And there's 200. That actually was an FOMC trade, which is a little bit tricky. That's kind of a binary event. That's either going to work or it's not going to work. It's still a loser, but I'm just saying it's not. That's kind of just a weird trade that we do on the FOMC. And again, feel free, reverse engineer. Look at what it was and what was the reason for it, et cetera, how it was done. And maybe you can glean a lot from that. But also where we are at in terms of how we are biased going into next week is important. And you can get a lot of information from this as well if you just look at that. And obviously where we are in green is what we have open. So we like Myrna. Myrna showed a ton of relative strength. So long call vertical going out to September 24th. On Myrna, continuing to collect credit in Amazon in a very strategic manner. I may add some calls to that next week. I have not yet. For now, I just picked up put credit, which generally when I go directional, that's what I do is I will have puts short and long calls. If we're directional in the other direction, then we'll be short calls, long puts. There's no need for that right now, obviously, because the market is so bullish. This Netflix is very interesting. Again, feel free to reverse engineer it. It's actually a butterfly that we sold. Instead of buying a butterfly, we sold a butterfly. We sold it as a BWB for a debit. This is kind of a very interesting trade. So it's looking for Netflix to be above 600, actually 605 would be best next week to take out all of these strikes and go higher. And you can see here I'm short $5 here. Correct? But I'm long 10 bucks here. So obviously if we blow through the whole thing, then the $1.20 cost becomes $5, which is kind of cool. XLV, I was telling you, healthcare, we got long butterflies at a very, very good location for about 60 cents and then tightened up our BWB just for a few pennies. So now we actually are along the 135, 138, 140, which is a BWB skewed in our favor. And last but not least, this one. I love this trade, okay? Again, feel free to reverse engineer and go through what's going on here. And if you do that, you should be able to easily figure out when you look at this cost structure and then you look at this call vertical expires next week, we now own this call vertical for free. 0, which is sweet. We actually own a $20 wide call vertical for nothing. And that has a max value of 20 bucks. And Tesla closed around that 7:30 already. So it's looking good for next week. We have 0 downside risk. We have 0 upside risk. This can only turn into a profit, which is wonderful. If you would like to trade with me, okay, just hit the little button that's appearing right there in the upper right. And I can teach you these techniques and hold your hand through all these trades, and we'll have a little fun. So join me if you can. And that's all for this week. Thank you, as always, for spending just a little bit of your weekend with me. Equity markets are closed on Monday, so we've got a shortened week next week. Try and use this time wisely. Look at some charts, look at your past performance, look at trades that are working, trades that are not working, and really just kind of take a little bit of time to relax, all right? All of that's going to make you a much better trader when the market is actually open. If you'd like to join me in the weekly options advisory and get some of these trades that I've been showing you every single week in real time to your phone, entry, exit, management, the whole nine, in addition to all of the other service that I provide in real time all day long, such as What's Peter Thinking audio messages, live sessions in our pro trading room, weekly webinars every Thursday that are members only. You can get all of this. Just click the little link here that's above my left shoulder right there, and you can join us for 49 bucks a month. There's never a contract. You can cancel anytime. It really is one of the best deals out there on the street, and I hope to see you there. On behalf of myself and the entire Shadow Trader team here in beautiful Philadelphia, Pennsylvania, I wish you good trading and good night.